Continuing on then with looking at books of prime entry, our next book of prime entry will be the purchase day book. And with the purchase day book, it's going to show a list of all supplier invoices that we receive. Okay, so the purchase day book lists credit purchases. Okay, it's going to list all the purchases that we make on credit where we promise to pay later. Okay, so this is going to look at all our supplier invoices that we receive, and we're going to list them here in the purchase day book. Now notice how similar this is to the sales day book, which we saw in the previous video. It's pretty much the same. But rather than having the customer name, we're going to have the supplier name. And because we receive invoices from different suppliers, the invoice number will obviously be different because they're coming from different companies. So we can see the date then, which roughly spans a week in December. We've got the invoice number, the name of each supplier, the net amount of purchase, the sales tax that we've suffered on the purchase, and then the gross amount that we owe to each supplier. Now, just like with the sales day book, when we post our credit purchases from now on, we're going to post the totals to the main ledger, which is where we do our double entry. So post to main ledger using the total, or the totals of each three monetary columns. So if we have a look then, net. Now that's the net amount of all goods that we've purchased from our suppliers. The total amount is 635. Now, if you're posting this to an account, where would you want to post it to? Clues in the name of the day book? Purchases. So we're going to debit and increase our purchases expense in our statement of comprehensive income with the total amount of purchases that we've made in that week. Okay? We're not going to do 4 individual debits to purchases. We're just going to post one total, 635 to purchases, to make our purchases account easier to read. Now, when we think about the total of sales tax, $95.25, can you remember where we post that to? Well, of course, it's sales tax, isn't it? And we're going to debit and reduce down our sales tax control account to reduce down the amount that we owe to Her Majesty's Revenue and Customs, or the local tax authority. Okay, we've suffered it on the purchases, we can reclaim it. And that will be a debit. We saw that in the previous chapter. So then the total gross amount of $730.25. Well, we've got to post that on the credit side of the payables account, because we're increasing the amount that we owe to our credit suppliers. Now again, this is our overall payables figure, and from now on the payables account will now be called the payables control account, just like we saw with receivables control account in the last video. So, overall then we owe $730.25 to our suppliers, but our accounts payable department need to know who they need to pay that to. And in the subsidiary ledger, the subsidiary payables ledger, we're going to break down that credit to payables control into 4 individual credits to each one of those supplier accounts. Okay? So then our accounts payable department know exactly who they need to pay money to. Okay? So, the subsidiary ledger then we're going to post the gross totals. The rule is, anything you post to payables or receivables control account must also be broken down in the subsidiary ledger as well. And what you'll find in your notes is some blank ledger accounts, one headed up payables control account, and then one with the subsidiary payables ledger breaking down individual accounts for each supplier. So I think it's about over the page in the notes. If you have a look, you should be able to find some blank ledger accounts that you can fill in. I've just drawn up myself on the board because they're bigger for us to see. Now we said then that payables control from the purchase day book, we know that overall we owe $730.25 to our suppliers. Okay, so that's the overall payables figure. If we were to balance off that account now, that is what would go to the statement of financial position as a liability. And that would be the main ledger. So let's write that in. Main ledger. That's where the double entry is taking place. Now, we've also got to break down that amount into the subsidiary payables ledger. Sometimes known as the subsidiary purchase ledger. Sometimes known as purchase ledger, so let's write that in. And you can see in your notes you do have these blank ledger accounts for each one of your suppliers. And if you've credited payables control, you're going to break down that credit into the individual supplier accounts. From the purchase day book, I've just abbreviated it to PDB. Paul, we owe Paul $86.25. That comes from here. And we're going to do the same for Joanne, Billy, and Anne as well. So, Joanne then, purchase day book 184. That's going to go on the credit side. And then we've got some ledger accounts for Billy and Anne as well. PDB, purchase day book. We owe Billy $57.50. And we owe Anne, our supplier, $402.50 as well. And if you were to balance off those four little accounts, the sum of those four individual balances carry forward would equal the balance carry forward on the payables control account. So to summarise then, if we go back to our diagram that we saw in the first recording of this chapter, the book of prime entry would be the purchase day book, where we post the total to the main ledger, the payables control account, purchases and sales tax control, and the individual gross amounts would get posted to the individual subsidiary payables ledger. And there we have it. Very similar to what we saw in the previous video, except now we're dealing with payables rather than receivables. Keep our answer to this illustration handy, because when we have a look at returns day books in our next video, we'll need this as well. Thank you.